Buying a home on a $120,000 joint income in New Zealand. Welcome back to another episode of Real Talk. Today I've got quite an important one for you, something that many of you out there are going to be thinking about at the moment. Number one, how do you buy a home in New Zealand in 2025? And number two, is it possible? Well, today I want to talk about a bit of a case study that we've done in terms of what a couple earning a $120,000 combined income in New Zealand can do or can buy in today's property market. So for the purposes of the video, let's meet Emma and Josh, who are our hypothetical couple. They are Christchurch renters. Emma is 31. She's a childhood support teacher and makes $55,000 a year. And Josh is 32. He's in tech support and he makes $65,000 a year. So combined, they make $120,000. Surely an applicable pair of salaries to some people who will be out there, but they're just our case study for today. So in terms of their income breakdown, this is how it looks in the 2025-2026 financial year tax system. So take-home pay, Emma makes $3,780 a month, and Josh makes $4,350 a month for a combined income after tax of $8,130 a month. Savings and deposit when it comes to buying a house, obviously your savings and your deposit amount do sort of dictate what you can buy and what it is possible. So for the purposes of this video, if you're comparing it to your own situation, feel free to do so with the differences in finances and things like that. But what Emma and Josh have put together in this case is a KiwiSaver contribution of $110,000 combined, cash savings of $20,000, and they have an emergency fund as well that they're not going to use as a deposit of $15,000. So as with all KiwiSaver deposits, they must leave $1,000 in their KiwiSaver after the deposit is made. They have to have been a member of KiwiSaver for at least 3 years, and they have to intend to live in the home that they are buying. It can't be used to purchase an investment property that you intend to rent out immediately. So they have a $130,000 usable deposit. Now, living expenses pre-purchase are something that the banks are going to look quite heavily into, and it's something to ensure you have a great understanding of in your own financial situation. So in this case, they pay $2,250 rent, $300 for utilities. They have a car loan that's $500 a month. Groceries, they spend $800 a month. Subscriptions and insurance, $250, and lifestyle, $500. And those are their set expenses on a monthly basis. Banks will look back at your bank statements from the past months, and they will make sure that your expenses are at least consistent or that you're kind of in control of your spending. So I would suggest before looking to buy a house, make sure that you've had for a few months all of your spending in line and everything nicely organized. So when it comes to getting approval or pre-approvals on buying a house, that the banks have something nice and easy to look at so that you're not having to spend time working things out and working out finances with them. Makes the process a lot less stressful and a lot faster as well. So total, they spend $4,600 a month, Emma and Josh do. And they have therefore a disposable income after expenses of $3,530 a month to go towards other expenses, savings, other accounts, things like that. So in terms of a potential mortgage that they could pay off, currently it's looking that the major banks are offering special fixed rates of 1 year from 4.89% and 2 years from 4.95%. When it comes to deposits, generally 20% is going to be the one that gets you the best pricing and the one that's going to probably go the furthest at the moment. But options exist from 5 to 15% based on eligibility for things like Kāinga Ora and other situations as well. Kāinga Ora first home loan allows a 5% deposit. Obviously, the first home grant was scrapped, but the first home loan insurance premium increased to 1.2%. And do bear in mind, we are not financial advisors. Please do seek your own financial advice. But really we're trying to give you a good idea of what's possible in today's market. So what can Emma and Josh buy on their income with their expenses and their deposit? So based on their equity and their income, their purchase price, they'll be looking between $600,000 to $630,000, which is a good amount of money, with obviously their 20% deposit of $130,000. So in order to buy a house in that price range, they're going to need a loan of $470,000 to $500,000, with monthly repayments that they can afford at the 4.9 fixed rate being between $2,400 and $2,600 range, and on a 6.4% floating interest rate, for example, $2,900 to $3,100 a month. That will keep them within their affordable range once you've taken into consideration the amount of money they have left over after their current expenses. What can they afford? Now, you'll obviously be out there thinking, what can I afford? What can we afford? Well, hopefully this gives you a bit of an idea when you apply this to your own financial situations. Here's a property in Mount Wellington in Auckland built in 1970. So the CV is $640,000. The deposit would be $130,000, and then they'd have a loan amount of $510,000 over 30 years. It's in some good school zones. However, when you're taking Auckland into account, you have to take other things into account, like traffic, like the age of the home. A lot of homes in Auckland are quite old, particularly this one is 1970 now. When you buy an older home, you're going to have to spend more money on maintenance. It may need renovations. You've got to be prepared for costs like that as well. And the median sales price in the area, $876,000. Now, in Auckland and Wellington, house prices have dropped quite significantly by 20%. So realistically, you can find these small properties or find new townhouses further around South Auckland. Now, buying a new townhouse further outside the Auckland CBD, yes, that is going to decrease the maintenance costs because it's a new property. However, townhouses, as we've spoken about in another video, do check that one out. If you want capital gain and capital growth out the other end of owning a townhouse, it's not going to be comparable to that of when you've purchased a house on a freehold piece of land. It's just not going to be the same. And then, of course, buying further away from the city, drive times are going to be longer, traffic's going to be worse, things like that. So it's worth taking things like that into consideration. However, in Emma and Josh's budget, this is affordable. So they can afford it with a strong surplus after the mortgage and ownership costs. However, the distance from work, auction luck, and other factors need to be kept in mind, as I have mentioned. So having purchased this house and paying the mortgage left over, they're going to have $2,191 remaining, which is pretty good, but there's other costs involved. So keep that in mind. Here's another property that they can afford. This one's in Christchurch in Hallswell, 27A Lancewood Drive. This is a 1985 build, and the purchase price, let's say, would be $630,000 with their $130,000 deposit and the $500,000 loan amount. Again, in some good school zones, you're looking not as far away from Christchurch City. Christchurch City's traffic isn't quite as bad as Auckland's traffic is. So the median sale price in the area, $850,000, median suburb rent, $640 to $680 a week if they were to hold on to that potentially and move somewhere else. That's a good figure to keep in mind as well. So in terms of affordability here at Lancewood Drive in Christchurch, yes, they can afford it, and their monthly savings are going to be a little bit increased on the Auckland property at $21.67 a month after expenses. However, this also being a 1985 house is a little bit older. You're going to be dealing with maintenance coming up a little bit more frequently than you would if you purchased a house like this one, 42 Wallingford Crescent in Rolleston. This is a relatively new build, 2018, obviously post-earthquake. Rolleston is a fast-growing area. There's a lot of new builds in the area and quite a good community out there as well. I did a video a little while back on Rolleston. Do check that one out as well to figure out why it is that people are moving to Rolleston. So in terms of that Rolliston house, they can absolutely afford that one too. It's a newer house. It's a nicer house. If you're speaking that way, and they can comfortably afford it with the monthly saving of $2,445. Yes, Rolliston's a little bit further away from Christchurch City, but again, traffic in Christchurch is not as bad as it is in the likes of Auckland and Wellington, and the maintenance costs of a house that's as new as 2018 are going to be vastly decreased. Being a fast-growing area, Rolliston as well, the potential for capital growth there is very large. So in conclusion, for a first-home buyer like Emma and Josh, or even like yourself, with a combined income of $120,000 and a $130,000 deposit, you can absolutely still secure a home in today's market. But where you buy makes a very big difference. Auckland offers smaller and older homes at the upper end of the budget with higher running costs and more competition. Christchurch provides more space and better value with lower prices and a strong surplus income each month after their expenses. And Rolliston offers the newest builds and highest monthly savings buffer thanks to low maintenance costs and a growing community, as well as strong capital growth potential out the other end. The numbers show that with a 20% deposit, disciplined budgeting, and clear understanding of ownership costs, home ownership in 2025 is indeed achievable and worthwhile, but success comes from targeting the right location and staying realistic about repayments and lifestyle trade-offs. So do take all of these things into account when you are analyzing your finances, what is possible for you to buy and where you want to buy. Take some of these things into account. Look at what you can do. Do obtain some financial advice. Definitely worthwhile doing that. If there's anything we can do to help, we at Najib are more than happy to guide you through the process of purchasing a home. I've done it myself many times. So please do reach out to us. Check out our other videos as well, where we frequently give market updates and talk about the various stages of buying and selling a house. It's very important to have those things in mind also. So thank you very much for watching this video. If you have any questions, please do leave them in the comments. Flick us an email, give us a call. We're very much open to helping you out. Thank you very much for watching. This has been Real Talk.